Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 6th of June, 2023, just after 5:35 p.m. Central Time. Well, we're hanging here in the metals. It's interesting. They're not going up or down very much at all. Markets are sitting around. Platinum probably the biggest move recently, and it gave back a chunk of that today. Not a lot, but a chunk of it. And the markets are waiting for something. One of the things they might get tomorrow is we're going to get the results as the Treasury is out there putting out a lot of notes. I believe they're doing a 4, an 8, and a 17-year. And I think we got like a 60, a 50, and a 40,000 amount. And those are billions in each one. So we're going to find out two things. How was it taken? Bid to cover ratio. I want to see where the money comes from. If it's just a typical source is fine. Is it money markets? And we won't find that out initially. You'll hear about it later in the day if somebody will write up about that, and it should get interesting. Remember, here we are on the 6th. We go into the tomorrow, as of tomorrow, remember, a week from today's the 13th, and a week from tomorrow, we get the FOMC meeting. Nobody's talking about it, but it's important. The dollar is fairly stable here, holding over the 104 area. Now, when we look at the gold market, if you'll remember on the weekly, we've had that break into the zone of the 18-week average of closes, and so far we're holding. When you look at the daily bar chart of August gold, we came down, and all of a sudden, the market is now in this area, and I think you see that, starting to develop, at least at this moment, sideways action. The pattern is still one of bearishness because overall, you're still making lower highs. However, you now have higher lows. Do you see that? So you're doing one of these. You're narrowing in just like that into a V, as you will. Where's the market fighting a battle? Well, it's pretty clear. The resistance to me is the 18-day average of closes, and the near-term support has turned out to be what I thought it would, and that's the 100-day average combined with the Bollinger Band. Now, the Bollinger Band over here was very interesting as the market came down, and now it's starting to try to arc up a little bit. Market gets interesting from this point forward. A close over 1990.70 would give you then at that point higher lows. Getting over this high would give you a higher high. That's the way it would count on the swing line. And a close there puts the bias to the upside. When we take a look, is the market overbought, oversold? No, it came out of an oversold territory and momentum is picking up. So trend down, bias down, hasn't turned that around, and momentum correcting an oversold condition. When we take a look at the gold silver, you can see how this market has just gotten under the red line, the 18-day, and it should mean silver chart looks a bit better than gold, and I think you'd agree it really does. Look at how this market has now just hovered into the 100-day average in green and the 18-day average. Like the gold, you have a pattern here that has got lower highs and, again, higher lows. One of these narrowing in, forming these V formations, and you develop sideways Bollinger Bands. I think the volatility for the near term is going to come out of the market. I don't think it's ready to break out one way or the other. Look for a lot of resistance in copper right up here, the combination of the black line and dotted, the Bollinger Band top, and the 200-day moving average. Market's been under it a long time. It's a valid resistance point. I think you'll see pros, if they are long, dumping their longs against that number. In the platinum, this whole rally lost the embedded reading, and you're pretty darn close to hitting that 18-day average. That was the objective. The market's still in an overall downtrend, believe it or not, and fighting a battle. I'll call it again. I realize you got under the 100-day average 3 times. But it came back, and it's just sort of that's the number that the market's fighting between the 18 and the 100-day average, and you are correcting present tense. You're not out of being oversold. In the dollar index, you lost the embedded reading right here. When that happens, you often make a run to the 18-day average. You have still done that. I'd have liked to have seen it actually hit that number It missed it by a fraction. That's not the end of the earth. You made your run towards it. If the market clears the highs of Monday, be careful. That could give you more short covering into the combination of the Bollinger Band and the 200-day average. There's nothing here that puts me into a bearish mode unless you close under the 18-day average of 103, let's call it 50. That number is going to climb when we reopen. That's why I call it 103.50. I want to remind you of all the different things that we offer. This is our free offering page. And as you can see, there's things galore for you to choose from. If you take a look, all you do is hit the click me. And from the click me, it creates a field for us. It puts it all into what you want. As you come out of this page, you'll click, these are the things I want. Boom. You'll put in an email for us, your name comes to us. We then put it together and we email it right back to you, typically the next day. If you do it early in the morning, the same day, it'll be the same day that you get that. And these are all the different products from the charting software, the charts of the day, the different courses, the Arun indicator, the pivot points. You can choose what you want, how you want to get them all through there, including, as I said, our charting software to take a good look at it. You'll find it a bit different than others. How do you get it? You move your cursor to the top, you'll see an icon. You go to iraepstein.com and go to free offers, and you can always call us at 866-973-2077. You have a great day.